I'm joined from London by Economist Laurie Laird. Thank you so much for joining me.
Leanne.
Hiya. There's actually been a lot going on today. We'll get onto it, but Jerome Powell's been speaking, so we've got lots to talk about. But
yeah, a lot there.
Yeah, but let's start right now with what do you make of the US Treasury Secretary Scott Bessent's words towards China as tensions over trade really begin to escalate? And his interview did actually move markets.
Leanne, I mean, I know you're a bit of an economics geek as well, so I'm guessing that this interview would have shocked you a little bit as well. I had to pick my jaw off the floor. Bessent's comments were really rather scathing and not all that much based on truth. Not only did he say, I'm repeating you here, that China wants to bring everyone down with it. He also said that China's in a recession or possibly a depression. This is nonsensical. The Chinese economy has been slowing. We all knew that. A lot of that has to do with that dreadful property price crash. We are starting to see some signs of life in the Chinese economy, but we're not in recessionary territory. We're certainly not in a depression territory. And if Donald Trump wants to hang out with Xi Jinping in Korea early in November, man, this is not a way to do this. And it feels a little bit like Bessent is caught. He's got two adversaries here in Xi Jinping and Donald Trump, both of whom really like to be flattered. And he doesn't seem to know who to flatter and how to time that. He did an interview with Fox News yesterday when he was quite conciliatory toward China. So these rather scathing remarks really caught me by surprise. He also said that China wants to export its way to economic growth. Well, that's been the case for the past 50 years. This is not a new phenomenon.
Yeah, absolutely. And I just wanted to ask you, how damaging are China's sweeping export controls on rare earths and critical minerals for the global supply chain? Because we know that rare earths and minerals, they control about 70% of the market. And I've got my mobile phone here. They're in our mobile phones, they're in our laptops, and basically everything we use.
Absolutely. You know as much about this as I do. I'm flattered that you will have me here. Rare earths are a funny one. It's a funny name because these compounds, these minerals, aren't that rare. It's just that because China has been mining them longer than anyone else, the world has sort of stepped back and let China really take a monopoly, a stranglehold on the marketing, on the digging up of these minerals, and not just the getting these things out of the ground, but processing them. When you add processing, so these rare earths come from many places, but China processes about 90% of these unusual niche minerals, and that gives China a massive bit of leverage when it's negotiating trade terms with the U.S. and with the rest of the world. You know, if you look at what the U.S. sends to China, it's chips, and let's put that aside for a moment. It's also agricultural products. It's things like soybeans. Well, China used to buy a lot of soybeans from the U.S. Now they're buying them from Argentina. Hasn't been one order put into U.S. farmers for soybeans from China. So the things that the U.S. sends to China, for the most part, are interchangeable. They can be found elsewhere. But these rare earth minerals at the moment really can't be found anywhere but China. So it makes the negotiations a little bit tricky. When Donald Trump says they need us, sure, China needs some of the stuff that America sends, but the rest of the world needs a lot of the stuff that China exports and is perfectly willing to allocate the exports of.
Absolutely fascinating. But the US, as we know, is threatening an additional 100% tariff on imports from China, and that will be from the 1st of November. And you also mentioned to me that Xi Jinping will be meeting Donald Trump. Do you think that both men can possibly reach a deal?
Yeah, I do. I do think there will be a deal to be done. Otherwise, I don't think Trump would have given himself to the 1st of November to actually impose those tariffs. But look, China's exports, despite the already heavy tariffs that they're paying to send to the U.S., China's exports rose by more than 8% year on year in the month of September. while exports to the U.S. fell by 25%. China is starting to divert its exports to other places in the world. So China is showing us, at least for the moment, that they can find other destinations for some of these products.
Yeah, absolutely. And I think they did start diversifying in Donald Trump's first term, because remember, we heard a lot about China and tariffs then. But let's get on to something else that's happening in the economic world. And the IMF is holding its annual meeting in Washington this week and has lifted its 2025 global growth forecast as tariff shocks and financial conditions have actually proven more mild than expected. Is this good news for 2025?
It's shocking, isn't it? And we just yesterday we had Kristalina Georgieva, who's the head of the IMF, saying that she's very surprised at the resilience in the global economy. She also said, but don't get too used to it. The IMF meetings won't really kick off in earnest until tomorrow, but we had a bit of opener just a few moments ago, Leanne. Jerome Powell, the head of the U.S. Federal Reserve, was just given an award. He did a little speech and was doing this Q&A, his question and answer, as you and I came on air. He gave us a real mixed picture. After the Fed reduced rates last month, we're all sort of thinking, what do they do next? Are they going to continue to reduce rates? And what will they base their decision on? Because we haven't seen any new U.S. economic data because of the shutdown. So we don't have a great sense of where employment is. We don't have a great sense of whether tariff-based inflation is beginning to pick up. Now, there's some information coming out tomorrow from the Federal Reserve, but that's qualitative stuff. It's not quantitative stuff. Powell gave a really mixed message here. He said that things look a little bit strong. The macroeconomic outlook looks a little bit stronger than it did when the Fed last cut rates. He also said that he sees a lot of downside risk to employment and he sees some upside risk to inflation. I don't know if you can read between those lines, but what I took from it is I didn't get the sense that there will be a massive rush to cut rates again anytime soon, if only because there's so little data on which to base that kind of a decision.
And it's so interesting because when I had a look at what he said, sometimes I think he's walking a tightrope to keep Donald Trump on his side somewhat.
Absolutely. I mean, having Donald Trump not shouting at him from the sidelines must be a little bit of a relief. But, you know, Donald Trump always has someone in his target. So it wouldn't be surprising if that criticism of the Fed didn't materialize sometime soon, particularly if we don't see another rate cut. But I got the sense from Powell, you're absolutely right, walking a tightrope, but I got the sense that things are finally balanced. And it didn't seem clear in his head which way he wants to go. The thing that really stuck out for me, though, was him saying that things seem a little bit stronger than he thought at the time that the Fed cut rates. So take that for now. It's not clear that Jerome Powell's scheduling can change, so it's not entirely clear whether we will hear from him again before that next Fed meeting at the end of the month.
Yeah, absolutely fascinating. I always learn loads when he come on the show. And just the S&P 500 and Dow actually turned positive on Powell's speech. So there we are. They saw it as a positive
I learned something from you then.
Yeah, there we are. Well, I just learned it from my computer, so it's not that smart. Laurie Laird, thank you so much for joining us.
Leanne.
Always great to have you on the show. Thank you.